I think you can take a snapshot in time, maybe a 1 or 2 year period, looking at some standard moving average levels and see if the stock actually reflects that it relies on those. You know, if you find
Welcome back, traders and investors. We have Paul Wallace on the line. He's a performance coach as well as a trader. He's from England, but he's calling us from Dublin, Ireland. Paul, how you doing today?
I'm very well, thank you, Joel. And yourself?
We're doing good here on this a little bit of a chilly Thursday morning in the D, but we're doing okay. So you're a performance coach for traders. How the heck did you get interested in that?
Yeah, it's a good question. It's a good question. I think it's kind of always been linked to my sort of my background and my history. So my kind of initial background was I was a sort of a battle manager for the Royal Air Force, and back in the 90s. And strange enough, at that time, in the mid 90s, some of the major banks were trying to poach guys doing my job in the Air Force to come and be traders on their bank floors, and I think that kind of piqued my interest. So when my contract finished with the Air Force, I ended up working in London in the city during the actual .com boom. Started trading during that period, and actually found out I really enjoyed it and was very lucky. I was very lucky, that Buffett quote of, a rising tide floats all boats. I was working in the .com era, and I was very lucky. And I think just over time, as I moved across to being a sort of a fund manager in FX, I found that people just came to ask me for help, and the help they needed from me wasn't, I didn't need to teach them how to draw a trend line or what the RSI was. Invariably, when people called me to help, it was about basically managing their own performance as traders. So it's a convoluted journey, but it's got me to where I am now, Joel.
Oh, that's very. So were you a pilot?
I used to fly, but it wasn't my main job. I was basically a battle manager. So I would sit in like a jet you have in America called the AWACS. So running the air war from there or from the ground and such. So and I got to work with the U.S. Marines and such. So it was all boys' own stuff kind of things.
What do you think? What do you think the banks were looking for? You think they were just looking for somebody calm, cool, and collected? They could perform well under stress. Or what do you think? What do you think? What characteristics?
I think you answered my question perfectly there, Joel. I think they're just looking for guys and girls who can manage risk, who are comfortable managing this, know when to be aggressive, know when to run away bravely as well, and have that sort of the ability to make decisions under pressure, the ability to cut their losses when they know they're wrong, and handle big numbers happening in a fast, fluid, moving environment. So there's certainly a lot of very sort of similar skill sets that between management and trading the markets.
Yeah, that's interesting because just along those lines, when I was training down the floor at the Mercantile Exchange, there was a firm called Singer Winger, and they would recruit athletes. They would recruit college athletes, and that was all that they had. Top level athletes, and they would train them to to be in the market. So I think we're drawing some parallels there from the kind of psyche it needs to be a trader. So let's just talk about your trading in the .com era. So basically, sure. You still here?
Oh yes.
Okay.
Oh yes. I'm hanging on to you every word.
Okay. All right. Well, thank you. That's a compliment. I've been getting beat up this morning. But .com. So you were just in there, and these stocks were just taking off, and you were just buying them and going to get a turkey sandwich and coming back and booking your profits, right?
Yeah. That to be fair, that once again, that's not too far from the truth. I actually worked for like an internet and telecoms company at that time, as one of their account directors, and I would go out and meet all these .com companies, and and basically, if I liked what I saw, I would buy some shares, and that was about it really. And as I said, I think it was Buffett who said that, rising tide floats all boats. And when I look back at what I did then and how I operate now, I was what in the UK I was a lucky punter. And my biggest stroke of luck was that I got out about a week to 10 days before it all crashed in sort of early 2000s. So yeah, I was just lucky. I consider myself to just be very, very lucky. No real skill involved at all at that time. So yeah, I'll take luck when it rolls my way.
Okay, what was that term that you use? A lucky
punter. So in kind of UK slang, a punter is like a gambler, someone who bets on whether it be horses or markets. So as I said, I consider myself to be a lucky punter within that particular environment. When I look back at it now, with what 15 years odd experience, now looking at what I know now and how I operate in the markets now and how I did then, I was a lucky punter.
Okay, what made you sell? Was it just the dollar signs and saying, "Wow, I made some nice money here," and I don't want to get greedy. What made because a lot of people didn't hit the sell button and have lived to regret it. What made you exit?
The honest truth is I got the fear, Joel. I got the fear. I used to sit in my office, and I tell this tale. I used to sit next to. She was the secretary. She was like 21-year-old secretary to the marketing director for the whole company. And I remember one day she just leant across to me and said, my boyfriend was in a pub in the city last night and got a tip for this company called, I think it was called Advanced Medical Solutions, and maybe you should have a look at buying that. And I was like,
yeah,
oh, it's getting mad. I'm getting tips here from all manner of things, and I got the fear, and I just I left, or stepped aside, and the market kept going up for about another 7-10 days afterwards, and then it crashed and never came back. So as I say, I consider myself to be very fortunate. Very fortunate. I don't consider it any real skill on my part. I was just I was lucky, and I'll take that. I'll take that luck when it rolls my way, Joel.
I hope you bought her a nice gift or something. After that, I mean,
I think she might have got a bottle of champagne or two out of that. But yeah, she earned it in her own way.
So you seen any kind of signs of that in the market now, in the U.S. markets?
Well, it's when I look at U.S. markets, I tend to just look at the indices. I don't really tend to go into specific sectors or specific stocks. I just look at the overall indices, and I actually as an ex aviation guy, I heard a strategist make a very good quote this morning after the comments of the Fed last night, and also sort of looking. You've got the US has been doing well, the UK is not doing too bad. The eurozone is still a bit of a basket case. China, the sort of is the jury's still out, and Japan is the jury's still out. And he described it as it's like a jumbo jet that's flying on only one engine. And I know from past experience, when that happens, you can't maintain attitude and altitude for too long. And so the US is powering everything, but I'm waiting to see whether we're going to see a kind of a continuation of these kind of strong trend we've seen, or whether we're getting ready for it to sort of roll over and correct. So I'm sat here on the sidelines waiting with bated breath to ready to pounce.
Okay. So the traders that you work with, do you work with new traders? Do you work with traders that are like on a major hot streak and they just want to keep it going? Or do you primarily work with traders that either have never gotten going or were going and are currently struggling?
Sure, that's a good question. I would suggest that you mentioned there about traders who are on a streak and want to maintain that. If I'm honest, that doesn't happen too often, because when traders are trading well, the majority of them are let's say enjoying the fruits of their own success, and are happy to crack away there. Invariably, what tends to happen is it's when things aren't going well. That's when my phone goes. That's when people pick up the phone and speak to me. It's invariably when either they've had a catastrophic loss, or they've been they've kind of been suffering that sort of death by a thousand cuts, and they're a little bit fed up of it, and are looking for some help to sort of turn around their situation. And as I said, whilst you can tweak the method, you can tweak the method of, the majority of the time it's looking at what's going on with themselves, and that opens up a kind of a broad spectrum for a conversation about what they need to do for for private traders, in terms of moving them from being really an amateur with a hobby towards being a professional with a business. That's where the conversation usually ends up, Joel.
Okay, Herd Capital is happening here, and he has a question. What do you think the top three beliefs of a successful trader are?
Well, that's an excellent question. That's an excellent question. Three top beliefs I would suggest. You don't need to know what's happening next to make money in the market. That's one I'd suggest. I'd suggest another one is that you recognize that the outcome of an individual trade is pretty much completely random, but that you're looking for patterns within sample sizes of your trading. And I would also suggest that they, in belief, in terms of they have strong conviction and belief in themselves as a trader, and they're very good at managing the market, the method, the money, and themselves. And they have they've really built that kind of self confidence and self belief in themselves.
Okay, nice.
That answers, yeah.
Okay, so if a trader, let's say a trader's had a nice streak and he's struggling, and he's kind of can't really come out of it. Just, I know this is kind of a general question, but what kind of advice would you give him or her?
Why? How about if I a year or so ago? That might help give a little bit of I don't know, a little bit of structure, a little bit of clarity. So there was a chap who'd been trading options on the S&P and had been doing very, very, very well as a private trader. And it was kind of funny. He'd been doing very, very well. Thought he was the he was the next George Soros. He was the next Paul Tudor Jones, and he didn't need any help or support from anyone because he was so great. And fair enough, he's away. And then what happened was I noticed on on the Monday I was in meetings and stuff, and I had about 7 or 8 phone messages from him, and he was pretty much each phone message was becoming more and more frantic. And when I finally spoke to him, sort of on the Tuesday, what had happened is I think he'd basically been he'd over extended himself. He'd lost all his risk management sort of limits and exercising sort of self control. I think he'd lost something like $60,000 on the first day, and then he'd lost the 60,000 he'd lost the previous day. So he was in a pretty traumatic, pretty frantic state and environment. And actually, the first thing I told him was, "Well, stop trading right now." He's just not in the right space mentally, physically, emotionally to deal with that. And actually, I had to sort of go through and look and it might sound terrible, but in some respects, embrace the pain in terms of learning. What have you got? What happened here? Why did it happen? We knew it was because he's basically he got euphoric, overconfident. Into a puddle, and he basically thought he knew better than the market. And if anyone's traded long enough, they'll know that as soon as you feel euphoric or overconfident about your trading, that's invariably when you're about to get a little bit of a sort of a slap in the chops to sort of bring you back to reality. And so part of that was actually us to him sitting down, going through it, working through it, and then we kind of set up an environment where we worked as if he was the trader on a desk in a bank, and he was running the desk, and I was his manager, and he had to report into me pretty much daily on what he was doing, what his analysis, how he's managing positions. And it was that kind of accountability and structure and the sort of framework that we built that's what helped him start to turn around his situation, and we did other exercises to sort of help rebuild his confidence and his self belief. And now he's going great. He's doing fantastic well, but for a period there, he really did. He really, he really was in a bit of was in a spot of bother there. So does that help explain, Joel? Does that
Yeah, I
like
mean,
give you a bit of insight?
I ran a trading room for bike trading, and the first thing, when I could see people getting struggles and everything like that, I said, first thing, is kick back. If you're going to continue to trade, kick back your size and just
Yep,
trade much smaller. And lo and behold, they do that, and they just start having winning trades because they're not worried about the loss as much. They're not thinking
exactly.
about the negative. That's it. And sometimes I even find out with my own trading. You can't let the fear of the loss overcome your setup for the trade. The markets are liquid. You have positions. S&P futures, which I'm active in. I can get out at my stop price, or if not very close to it. And that's the one thing I like to recommend to traders too. So, all right, Paul, we're gonna let you go. Thanks a lot for coming on. You had a lot of good points, and we'd certainly like to have you back on our show again.
Very welcome. It's a pleasure to speak to you, Joel.
Okay, have a good day.
You too. Enjoy the rest of the day.